Good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, March the 2nd, a little bit after 4 p.m. Eastern Standard Time. I want to welcome everybody on board, new as well as old. And as always, let's get right through the disclaimer. This webinar is for educational purposes only. I am not a licensed representative or giving any kind of trading advice whatsoever. Okay. What is going on in the markets today? We had a really nice rally, didn't we? I'm going to shrink that and shrink that so I can see you guys a little bit better. Just a second, I want to expand this thing. There we go. Okay, let's take a look right at the macro picture starting out. NASDAQ absolutely exploded through the 61.8 Fibonacci extension. You can see here on the right. So that didn't stop the momentum whatsoever. We have some divergence or conflicting information as far as the charting. Let me, is in the indexes, let me get rid of the high-low bubble. As you see, we did reach a new high in the Dow Jones. So that was something people were waiting for to see if it was going to happen. So we've clearly shed that hurdle. And when I looked at this over the weekend, it definitely looked bearish. I believe there needs to still be a retracement in the market. This market has been breathing in for a long time, and it needs to exhale. So we have some conflicting information in regards to the S&P 500, because we have a breakdown as of Friday in the person's pivot study, but we have a breakout today. So this generally means that there is indecision in the market. So what I would typically now, on all three indices, the DPO, detrending price oscillator, has triggered that this trend is turning. This may be a hiccup. This may be just a fake out. It doesn't look like it from a price standpoint on the NASDAQ, that's for sure. I do still have on the S&P 500, which is what most people track, in regards to market direction and trending, we still have a downturn hull. Let me make sure that everybody's muted here. Okay. So we have some divergence, is what I'm saying. I mean, in the long run picture, as one of our astute members who's a very good student of charting says, the long-term picture is bullish, and I've always said that in every single one of my webinars. It's just the market is going to, it's going to pull up, it's going to retrace, it's going to breathe. That's what the market has to do in order to be able to survive, just like us, human beings. So divergence in the indices, it is still overbought. We'll see what happens in the next couple of days. Those will be the telltale signs of which direction this market is going to go. Short-term picture, we had personal income outlay today. We had the ISM Manufacturing Index. Personal income was what was expected. We spent and saved about what we were supposed to in the month of December. The ISM I didn't look at. I guess the consensus was 53, came in at 52.9, so visibly slowing is what they call those, visibly slowing ISM manufacturing. So that didn't really affect the market that much. And Yellen speaks tomorrow evening, no biggie, after market. May affect Monday, but I don't believe this is anything earth-shattering. Nothing really going on Wednesday that's significant. Of course, at the first week of any month, we always have the Thursday before the end of the Friday, or close of that week, we have jobless claims, and then we have the unemployment situation that comes out on Friday. These two things do move the market, so be aware of that. Friday unemployment and jobless claims. Okay, lot of stuff for me to go through. I started that service today, and I'm going to check it out for the next month. I did say I would share this information with the group as I do this, and if you guys are interested, then I'll obviously pass on the information to you guys. And you know, after we've looked at it for a solid month, I've looked at it for 3 weeks. I've had pretty good success. But you got to be right on top of things. I missed like 3 trades today, only because I was working out, and I tried to change my schedule, but I did. It still didn't help because there were some moves that I missed. One was NXPI. Did everybody see what happened to that over the weekend? They're being bought out. This is SLXP, Salix Pharmaceuticals. Okay, it didn't seem like it did very much after hours. It's down. It was down 32 at the close. Let's see, what did they say? Salix Pharmaceuticals, net loss of $4.51 a share versus 58 cents a year ago. I don't know if that means crap, to be honest with you, because this company's being bought out for $158. So what is going on? Let's see. Something's not providing financial outlook, obviously. What else do they say? Adjusted loss of $2.61 a share versus 25 cents a share estimate. Oh boy, they just got destroyed. But look, nothing's really happened after market. It's just kind of stagnant. That's kind of why I was a little concerned to go into this. I shared the information with you guys again tomorrow. Let's see, the consensus loss of 24 cents. Fact said consensus loss of 24 cents. That came at 261. So this company is just absolutely horrible. 13.5 million versus 237. What is this? Revenue. Well, they had better than expected revenue. Salix will not provide a financial outlook given its pending acquisitions by Valeant. So that's that. We'll see what happens tomorrow. Some of the alerts that I missed, though, was NXPI. As I said, they really kicked it over the weekend. I mean, they just smoked open. You can see they just exploded. Somebody came in at 9:57 in the morning, which was in this first, well, this is an hourly candle. Let's go to a shorter time frame, 5 day, 5 minutes. 10:05, right about here at 9:57, between here and here, a gentleman came in, or a gal, bought 1,000 shares of March 100 calls for $1.90. They're worth $2.50 or $2.35, or what would be the mark? Yeah, I guess the mid would be. Well, the best way to do this is sell that. That way you can see where what they expected. You could get between $2.35 and $2.45, $2.40. Person's already made 50 cents on their money. Not bad. But I missed it. Could have jumped in on that. That could have actually been a good trade, even if it was an in and out today. Oh, somebody came in a bullish trade towards the end of the day. It's one of the picks that I already had that I was looking at, and that's Nike. And I think that was also reported in the Best Choice newsletter. They typically do a run-up towards earnings. If you highlight this area, what do I have here? Best profit? Let's try best rating. I guess it's still saying 70% probability. But it's a typical run-up to earnings. If you just hit the candlesticks, you see a huge bullish engulfing candle today. Move your cursor off the chart and take your eyes and take a look at the high, right? So between 98.73 and 104.38. So I would say a midpoint would be about 101. What do you guys think? Yeah? I mean, you could add those two together and divide by 2, but just visually seeing, that's a difference of $6. Take 6 divided by 3, puts you at about 101. So in regards to that, this person came in on this weekly, which I decided to do as well, because they purchased 1,000 contracts, 1,499 contracts at $1.33. So somebody dropped nearly $200,000 thinking this is a bullish move. It's at 98.75. We have a historical typical run-up to earnings. And this is a very bullish looking chart right here. Wide gator mouth MACD. The 8 EMA has crossed the 21 EMA. By the way, I was doing some experimenting with this 821, and I find a quicker trigger if you use, instead of a 21 EMA, you use the old, because I started out learning a 10 EMA crossing a 20 SMA. But then some of the people out in California turned me on to an 821. It's also used, a lot of other people use it. So what I'm going to do is I'm going to change this one to a 20 SMA. Now keep your eyes right here, the blue and the red crossing. You can see it's on this candle, I'm sorry, on this candle here is where you had the crossing. It's a little bit, well, actually that's a little bit slower now that I look at this chart. Let me go back to this one. Back to the 21. I was playing with it in some other longer term charts that seem to work pretty good. We'll just keep these default here. Okay, so Nike seems to be like a good run up to earnings. This little run up to here. Earnings are coming out on the 19th. So clearly this person positioned themselves after earnings to perhaps take advantage of a good earnings release and have that time still to be able to perhaps enjoy some of the run-up that Nike could receive after that. One of the things that I like to do is go to a 5-year chart. You guys can do this. This doesn't take too long. You see all the earnings releases at the bottoms. Since you know this is the first quarter release, you want to look at this one. Just the easiest way to be able to visually see this without having to adjust your charts, put your cursor on the third quarter and, I'm sorry, the third quarter to the second quarter. And that way it will show, which one is this one? This one is in June. So it'll show this one. Well, Nike collapsed last year. Didn't do well. Let's take a look at the year before. Nike popped, so we got a 1-1 in 2013. Because this is real accurate information, folks. Let's look at 2012. Nope, went down, so we got a 1-2. And lastly, let's take a look at this year. And this year also, it didn't do so well. So, not real good track record for their first quarter earnings releases in the last, what year do we have here? This is 2011, so last 4 years. But it's a typical run-up to earnings. A RUI, as I used to call it in One of my esteemed colleagues at Best Choice used to call it that. That's where I got the acronym RUIE, a run-up in earnings. So it doesn't mean you have to keep it through earnings. Clearly, this person positioned themselves by choosing 1,499 contracts, spending nearly $200, but it's after the earnings release. So that was one that came through that I thought looked pretty good. Interesting about Yum, that's another one that came through, but it came through as a bearish trade for January 16. This person bought 4,000 contracts at the 80 puts. January 16, right there. Get rid of this. If you guys can see that. I'm sorry, where's the 80 puts? What am I looking at? Puts. I'm sorry. Hello. Here it is. Somebody came in and bought 4,000 puts at $7. Which is $2.8 million they spent. And that's pure premium. Now, they bought themselves some time. Here's what's interesting. When that alert came through, and that came through at 12:43 p.m. Eastern Time, I started looking at Yum. Why? Because normally the first thing I'll do, and this is just a habit I'm getting into, and Mark, you might want to take note of this. The first thing I do when I get an alert is I'm going to BCS to see what happens historically. I want to know if I have that precedence in my favor. So there I popped up Yum, and I'm thinking short term. I'm saying, well, gosh, March looks pretty doggone good. Sure enough, it's a 12 out of 12, 100% run up with about a 5% move. So obviously I went to verify this trade down here, and sure enough, there it was. Because just because there's an open order doesn't mean they're always getting their entire fill. I mean, they're going to send it out to the 12 exchanges that trade options electronically, but they're not always going to get filled their total amount. So I started saying, well, what does spot month look like? And then all of a sudden, this jumped out at me. 46,000 open interest at the 82s, 82 and a halves. Now, when you go to the charting, it does look like Yum is just screaming overbought on pretty much every time frame. So this may be a short-term trade that I jumped in on this because I'm looking to make a short-term profit on this. 1 year it's screaming high. Let's just go to a linear chart. 99.4 extreme on a 6-month. 1 year is 99.7. 2 year, let me get rid of earnings though. 2 years, kind of interesting though. I kind of almost see like a double top will form right here, and you got a really nice U, but this may be the beginning of a cup. Longer time frame, but if anybody studies pattern recognition, this could be the beginning of a cup, and then a handle is going to form, which typically means it goes up. Now, if I throw on earnings, it's kind of Yum Brands. Auto setting, it's at 99.5. So to me, this is a short-term play, which I took advantage of for this bullish run. I don't expect to make a lot of money, but I expect to make a little bit of money. But that's an interesting one that came through. Now, this is really interesting, and we missed this. I missed it, I should say. I should have told you about it. One of my colleagues that we email back and forth trades that are possibly upcoming, which, folks, you can feel free to do as well for those people that are shorter-term traders, or if you see something that pops up that looks good. But what I would suggest is to probably the easiest communication and the least intrusive and easiest to identify and hear is Skype. So anybody who's got Skype, which is one of the greatest free services in the world, free calls any place and visually see people, everybody uses it. Just look up my last name, offer me an invite, and we'll go ahead and communicate that way. And I've always got it up on my laptop, and I've always got the sound up, so it's the easiest, fastest way to communicate. So one of the ones that we missed that was shared with me is Weight Watchers. Weight Watchers was a historical short, 10 out of 10. Not real good rating. You wouldn't find this if it was a minimum rating of 4, folks, so always keep that in mind. I will run lists, and I spent some time this weekend running several different lists. We'll go over the trades here in a second, of using different parameters. For example, you'll see here there's 1 cycle, 2 cycles, 3, all done for the same day, which was Saturday, but they all had different parameters. And one of them was reducing the rating to below that 4 to about a 3 to be able to find these kind of trades. So before I get into showing you those, what I wanted to bring to your attention not this, because we missed this. That's what we missed, that short on earnings. Would have been really nice. Went from a close of $17.59 to a low of $10.09. Wow. Huge money. It continues to go down. Now, it's probably going to pull up. It obviously is. Every stock does. I like to play the retracements. You can make some money on this. It'll bounce up to about the 49 in some time. You have to buy a little bit of time, and you got to make sure you've got all the triggers. Right now, I don't have 2 triggers that I look for, which is the PPS and the MOBO. I do have the DPOs already triggered, and of course the Hull is always going to be the early trigger. That's the best leading indicator that I've ever seen. But this is what I wanted to show you that was very interesting, is January. Nothing here, folks, right? But look over to the put side. A lot of people loading up. And in that regards, today somebody came in on the January 16 $5 put, spent 85 cents, bought 3,000. Just a lot of money, I guess, when compared to some of these guys, right, that are dropping 2.8 million and those kind of things. But still, 85 cents is $85 times 3,000. So they still spent over $250,000 in premium. But look at everybody else. These are open interests. And I looked at this 10 to see how long has that been sitting there. And it's been sitting there since about the beginning of January. The easiest way to do this, if anybody wants to know, is when did this, when did the volume show up? When was that unusual volume that somebody came in and bought a lot of contracts? What did they spend? How much are they betting? Is simply go back to analyze and then walk it back. You can see it here, and all you need to do is walk this back. Now that's 17, you see the 10s here. The 17,000 went to 16, but someone still came in with a huge lot. So I'm going to keep going back until I suddenly see that volume pop really big. And then I can see, well, somebody as I recall, this was sometime in January. Well, there's 4,000 that came in on the 11th. Actually, this may have been back in December. Somebody came in with a 10,000 lot, I think is what it was. Anyways, you guys, I think, understand the gist. I don't want to get into this too far, but That's a very great way of finding when does somebody, and if it's pretty close to the time frame that you see other people loading up, people know something. So they really must hate this company. And of all weight loss companies, and I did a lot of research on this because I'm in a major part of my life where I'm getting in shape and losing weight, I did a lot of research on all of these companies. Who has the best track record? Who has the best system? I tried Nutrisystems that Dan Marino advertises. I tried Medi Weight Loss that gives you something called a phentermine, which is a drug that is like speed. It's not really good for it. It's almost like Fen-Phen, which was banned. You lose a lot of weight, but then you suddenly get a carb rush when you start eating carbs again, and then you do rebound and gain just as much weight. Long and short of it, Weight Watchers was rated #1 of people who use it and stick to it and lose weight. So I don't know why people hate this company, but evidently they do. So that came in, and somebody came in with 3,000, bought 3,000 puts at the 5 for the January 16s. Other than that, oh, wait a second. They also, somebody came in and bought 12 at the end of the day. Hold on, I got to expand this. At the end of the day, at 3:52, right before market close, somebody came in and bought another 1,271 at the April 15s puts. There it is. Volume came in right there. So people are spending some money again. 1,200 contracts at, what do they pay? $1.35. Well, 135 times 1,200. 162,000. So just keep that in mind. I'm putting that down as quote-unquote other trades in the Excel sheet, and you guys can do what you want with that. I don't go out and buy that much time. I'm a shorter-term trader at this stage of me rebuilding my account. I can't tie up money for that long. So that was kind of it. And of course, I told you about NXPI. The guy came in right at 3 minutes to 10 and bought 100 contracts at $1.90 for the March 100 calls. And that thing is worth, like I say, $2.35 now. So some of these you got to really you got to jump on. So you got to be very quick in your analysis as well, All right. I'm going to minimize that. There's 2 earnings I want to talk about today that are this week. And earnings season is pretty much done, folks. It's only a couple to happen. Big is coming out, 91.67 probability win. And that's using 12 years worth of history. Average move about 15.64% or 15%. I've talked about this before. I think I mentioned Big and people buying some time on Big. I don't remember what the month was. Well, there's 2,100. Oops, let's go to Big. Let's go to trade. Wasn't in January. Wasn't in October, July. April, there's some short interest. But this could be a credit spread. The 47.50 and the 37.50. That's my feeling, is that's what it is. It's a $10 spread. Somebody came in and sold that and bought that for protection, just in case the trade goes against you. And that's a $1.72 credit. And if this thing continues to rise, they get to keep all of that. They bought some time, April too, so that's my feeling of what's going on here when I looked at it. March, there's 486 contracts at the 50. And based on the MMM move of $3.70, let's just call it $3.70. Let's just call it $3 to make it easy, and $48 to make it easy. That puts me at 51, and this is based on an overnight move. That is what the MMM is based on, market maker move. The IV plus or minus is $4.50, which puts me even at $52. Let's take a look at the charts. What are we at? 20-day 1 hour? Oh, I already got these presets, so I don't have to do this. That's a pretty bullish looking. I'm just waiting for that DPO to pull up. If it pulls and breaks tomorrow, that's a pretty bullish sign. And what we're looking at is at the 61.8 extension. And this was very easy to do, folks, for you, that people that want to know how to do this. You just simply take the most recent high, and I usually use a 6-month time frame, take it to the low. I'm sorry. Take it from, where did I do this from? From here. Yeah, this was a little bit of an art to come up with this. I saw that it meandered sideways, so I took that low here and I said, all right, it popped here. That's where it took a nice run, broke the 49.89, meandered after it broke it, and then ran it up again. So I took it from that low to that high, and then, okay, it retraced a little bit down to here. Now it's off on a run again. So that was the way I found these extensions at $61.850, which is great. It's over, that's 29 cents over what my target price is. Best choice, 15% move, forget about it. We don't even have to talk about where that target is. I put it on the Excel sheet. I think that puts you at 50. Did that stock go up today? Yeah, oh geez, went up $1.17, so 48.88. 1.1584 puts me at a target of 5,662. I don't think so. Times 1.1584. That didn't work right either. 48. My apologies, everyone. Yeah, it pays you all the way out to $56.62. Which, gosh, if it goes that far, guys, we're in heaven. So that's coming up, and that is the 6th. And the 6th is Friday before market. The only other one, and I don't know, folks, I need some comeback. Oh, I'm sorry, I didn't address some of the questions. About Yum, was that possibly a bull call spread? Let's go back to that question, because you saw some huge, yeah, do you see this here? That could have very easily been somebody buying the 8250s, selling the 60s, but that's an 85. That means the stock has to run past $85. They're short selling the short sell price in order to get full realization. I'm not going to take the chance of that stock running up so high when it is so overbought. And I already did these extensions from the low to the high to the last low to see, because this is meandering. This is threading the needle. If the 49 and 89 was a needle, price is going down, up, down, up, down, up. It's called threading the needle. You don't want to trade in this time. So it's obviously taken a breakout. Everything looks very bullish, though. I don't see any sign right now of it retracing. Now, the next stop would be $84.77 at the 123. After that, 138, $86 to 150.88. So that's the next potential run. If they did a bull call, in my opinion, that's taking a pretty big risk for a 3-week time frame. That addresses that question. Bob, I don't know where you were putting in that comment about March. I lost my train of thought on that one, or I didn't see you. All right. I want your thoughts about retail. We got a retail company coming up with earnings this Friday before market. What do people think of the retail sector? Good, bad, indifferent. The one that popped up on the radar is Foot Locker. This came up on a scan. Well, Big came up on the scan for the, I'm sorry, well, Big is, again, a run-up. March, Foot Locker came up. But this is like after earnings, is what it looks like. Because earnings is in the front spot, which is this Friday before market. So this run of 91.67% really is after earnings. I put it down as an earnings potential trade, but hopefully everybody will listen to this recording and not just look at the Excel sheet. I believe this is an after earnings trade. Okay. You did a calendar. The person who had, Bob had mentioned March, and I didn't know what that was in reference to. He did a calendar of February, March, February on it. And obviously that's worked out, I'm sure, very well for you. FL. It's on a rise. It's closed. 5609 would be the 61.8% retracement of its last 6-month high. It has closed above that today. It broke it 1, 2, 3, 4, 5, 6 times, and now it's the 6th day. Even though that's a doji, I've got the hull turning over. Those things normally, when you've looked at this hull as long as I have, that's not a good sign when you got that curve like that. However, I've seen head fakes before. I've seen head fakes, and this stock seems to have a lot of volatility, as you can see here. So, because you had the hull actually turning up on this day, like it's a positive, and then it just crashed. So, but Foot Locker's coming up. It's Friday before market. It's a historical 91.67% move. I don't think it moved much from when I did the analysis. Yeah, 1 cent. So target strike I put as $57.50 if you're going to do a long on this. And there's a lot of nice interest here in spot month. More definitely than here. You can always go to option time and sale, or today's option statistics, and see where the volume is. Somebody came in evidently. This is total volume today of 133 or 1,300. So there is more puts than there are longs actually. However, that's today's statistics. So if you look at open positions holding overnight, there's a preponderance of it being bullish. April, not much. May, there is here at the 60s. Again, that's buying some time. That's buying well over 2 months. But they're definitely bullish. However, you also see 4,000 and 4,000 more than likely. This is somebody probably doing a credit spread of $1.37, unless they're negative and they're doing a bear call or a bear put spread, where they're buying that, and selling that for $1.38. That's a $5 spread. That's actually a really nice price if, in fact, by May, the stock closes below your short price, because it's only $1.38, or I always do it by hundreds, 138, and my spread is 500, so the difference is really good. It's 362, which is almost double my money. Well, it's more than double my money. So if in fact that is a bear put spread, then it's a pretty nice trade. So FL, I put 57.5, which Really isn't a lot if, in fact, that they hit on all three cylinders. Okay, enough with that. And you can take a look at what it's $2.65. That puts me way over $57. That's the MMM move. $3.70 puts me way over the $57.50 for the IV plus move. Best choice puts me at a ridiculous $59 in regards to the average percent move that I could expect this to do at 6.34%. Okay. Seasonal longs for 99% of the people on this webinar, and probably 90% of all traders are only bullish traders. They don't short the market. So the newsletter talked about the market retracing. I do believe there's going to be a correction, not a big one, because the long-term picture definitely says that this market is going to continue to rise. Let me do this. Give me 1 second, folks. I'm pulling up some information that I think is important for you to know as far as long-term trades. And let's see. Okay, let's go back to Priceline. I want to talk about Priceline. This is from one of our esteemed members. No, this is GE. Got to talk about this one, Ghost. This is another alert that came in. Somebody, I believe, on the webinar, Joe, that's right, he emailed me about this as well, and it was a good eye catching this thing. Somebody came in, General Electric, and this is an important thing to talk about. I got to watch time. Somebody came in on GE, and they went all the way to January 17. They bought 125,000 contracts, and I believe it was 89 cents. Let me just verify that. 52 cents, excuse me. 125,000 contracts. Now, think of who GE is, folks, what their market cap is, how much this stock moves. This is one of those blue chip stocks into everything that really doesn't move a lot, right? I mean, it's really got to take a real thrust to move this thing, and this person's taking a very bullish position at 30, right? I'm sorry, what they did, they didn't buy a directional, they bought a bull call spread that's now worth 59 cents. They paid 52. Which means they're banking on their short price, their stock being above their short price of 35. The stock is at 26. It doesn't move a lot. They're buying a lot of time, which is 2 years. So with that in mind, I think what's an interesting note to make about this, and this comes from another subscription service, Bottarelli Research is the name of it, Brian Bottarelli. He's a good trader. He makes a very, very good point, and that is that this trader clearly thinks GE is going well past his break-even of $30.52, number one. And if GE manages to hit the short strike of this spread, which is $35, which is a 35% move, then this trade maxes out at a profit of $56 million. Huge bet. But beyond that, I think what's an important note is what does that say about the general overall economy and this individual trader who just dropped $6.5 million on this trade? What is he thinking and saying about the overall general economy since GE is into everything? It's got to be bullish. He's feeling this economy is going to continue to rise over the next 2 years. and hopefully it'll get past his short strike price of 35 and he can max out on his profit. Very interesting to note. Somebody came in and bought the January 17, 30-35 bull call spread. So I wanted to make that note. Back to Priceline. I believe Priceline is going to, Netflix and Priceline, I believe, are going to do a short-term retracement for anybody who wants to play the rebound and the retracement. It has almost hit its 6-month high, total 100% retracement of 489.29. Have 2 days. This is a bearish engulfing candle, by the way. You guys can see this. Maybe it's best to show it on best choice because then it'll actually show the there's a bearish engulfing. Now, it is saying a 90% probability based on this. Now, this isn't always accurate, folks, but saying a 90% probability it's going to go up tomorrow. But that is a bearish engulfing pattern, which tells me the stock is pretty much needs to exhale because it's been inhaling a lot. So it needs to exhale a little bit and do some retracement. So I believe that's going to be a potential short-term short. Also believe the same thing with Priceline. Again, these are very short-term retracements. As you see, we had the Hull's now giving me a signal, an early trigger signal. And when it's this far stretched, usually the Hull does not do a hiccup fake out. If you look at this pattern, there isn't really a white to purple. There's a little one right here, but where was the stock? It was meandering in the middle of the 49.89. You know, you got to be conscious of that and be able to see which signal is going to be stronger to give you more confirmation of a trend directional change. This is pretty strong. Where is it going to retrace to? 1200, 1210. Some people calling it all the way down to 1190. I don't believe it's going to retrace. It may. You've got some bullish interest, open interest right there at the 1200s. I'm sorry, bearish interest of 2,191 open interest contracts at the 1200. You do also have some bullish interest here, though, at the 1250s. Way out here, 1332 at the 1300s. That person just could be selling that and getting a credit on it. All right, I need to burn through a whole bunch of other trades here real quick. So talked about GE. I want to go through this fast. Avis. Historical nice run. Best rating. 78% best on best rating. If you use best profit, right up into earnings. 85% probability. So this definitely looks like a bullish long-term trade. This also came in through the service, not today. I had it written down. May 65s. May 65s. 29,000 open interest contracts. 215 by 240. Next. MAC, Macerich Company, March 90s, 17,000 open interest compared to everything else. That's some huge, huge volume coming in there, or open interest. Look at best choice. What does it do seasonally? You have a really nice pull-up. 90% probability with some good 7.8 rating, 31% average move. So that's pretty doggone strong. This person is taking a front month position. It's pretty cheap. There isn't that much here in April or May. So the real money that this person laid out, and you have some big volume coming in, 2,400 a day. Cyan. March 11th with 11 days, the 20 and a halves right there, 5,876 for $1.21. That's the 20 and a halves. That's only 52 cents away. What does it do seasonally? Seasonally, I was a little worried right there. But then when you highlight it again, the composite can be deceiving. Let's use best rating a whole zone. That gives me a 70% probability long from about right now to the middle of the month. Not real great historical, but you have much more precedence to go long than you do short. So in lieu of that, plus some big open interest in the monies, somebody took advantage of Groupon, GRPN. March, somebody took the spot month, 17,000 contracts. They bought the 8.5s. And there's another 4,300 volume that came in today. And that's for this week's expiration. It's down 5 cents. I don't have time to go through all the charting here. I want to get through all these trades so you guys can see this. I did Yum. Williams-Sonoma, I don't know why that came out, and I didn't write which month. So this is going to be kind of hit or miss. Don't know that. I wrote it down. Hertz, HTZ. $1,700 right there, but God, a lot of short interest too. I don't remember this was bearish or bullish. Oh, yeah, there's a lot of bullish interest here for the March. And let's see what seasonally it does. Ah, that's why I put it down. Seasonally, it's a big home run. 87.5% probability. So 87.5. Okay. What else do I have? Oh, I did the WTWs already. That's it. Oh, one more. And this is, you can't use best choice for this. There isn't enough history. Or no, I'm sorry, you can. ACAS. This isn't the one. %, probably not a real big mover, folks, so be careful. Kind of meanders, mishmash. I put it down for a reason, though, the May 16s. Stock closed at 1465. And what do we have? ACAS. And May 16s. You see a lot of bullish interest here, of course. Much more preponderance over the short interest, but they went for May 16 right there. 40. No, I'm sorry, that's the 18s. 16s. Yeah, the alert came in for the 16s, but then I noticed all of this open interest here at the, and again, you could take a look at the historical percent move you expect to have on this. That's just huge, actually. 25.71% is huge. Now, it's a little skewed here because of the 71. You'd have to take that off, which really does not make it a 25% move. IV plus is $1.38. MM is 32. Hold on a second. My apologies. Okay, so that's the last one I wanted to put on. Um, yeah, I didn't review that because that's a before market earnings tomorrow, Mark. So nobody could take advantage of it unless they got in on it today. And well, bear with me 1 second, please. My apologies. Hi, Tom. Hi, Joe. How everybody? So anyways, yeah, I guess I could, now that I think about this, because there's an April position here of 2,715. This company is coming out with earnings tomorrow morning at the 37s. So you could see what happens before, after, I believe this was more of an earnings related trade, even though there was a lot of people that positioned going out to April with probably about 2,000. I know there was a lot of contracts here, and the price was pretty expensive, so they dropped a significant amount of money, over $250,000. So that's KATE. And KATE, I think that's the one I said you can't use really. Yeah, that's the one. Other than that, which is ridiculous. It's a one-year move of 17%. You cannot make that as a seasonal cyclical trade, so you can't use best choice seasonality for that. All right, I'm going to open this up. It's 5:01. Let's talk about any trades that you guys want me to look at. Go ahead and type them in if you want me to analyze them. LL. Yeah, I looked at LL. Not real froggy about liquidator lumbers for some reason. I know there's a run right here in April that looks pretty good from a seasonal perspective. Let's see if there's something in here too. There's a 17% run here. So yeah, I remember looking at this seasonally. I just didn't like the charts for some reason. And last year it went really against the trend. So I don't know if things have changed from last year to this year. There was a 50-minute T. You're going to have to retype that, Earl. I don't understand what that was. Oh, Jose says there's a 50. Yeah, okay, there's a 50% or 25% drop today. Wow. Oh. Oh boy. Oh boy. Well, okay. Okay. Now I understand. Could be a morning star based on what happens next day. If that's a morning star at the bottom of it, then yeah, this may be an opportunity to buy this bounce back after them getting crashed on earnings. And we do definitely have a historical precedent on this. And we did have a 75% probability short. I don't know if it ran into, didn't really run into, well, it did. Not a real great, 57%, but it did run into March. So if you just use best rating, which you can't pick up this short, when you use best rating, you have to use best profit to be able to pick up that short of 75%. But it definitely, seasonally historically said it was going to potentially go down, and now seasonally we definitely have a potential of it running up hugely. So perhaps we could look at, go online is probably what I would do. Let's type in, let's do this, LL earnings. Doesn't say when the next earnings is, but obviously we're looking sometime here at the end of April and May, so we could take a big run in here. Let's see what kind of volume there is in May. Well, got some good significant volume there. So not a bad choice. Seasonally, historically, I would wait for the pull-up a little bit and a little bit more confirmation that she's done, people are done puking on it. Okay, I got to read some of this. Okay, 60 Minutes TV show exposed last night. They have formaldehyde in their lumber. Ooh. Ooh, LL may be in trouble for selling illegal flooring. Thank you, Leon. Thank you, Earl. Gary, there was a 60 Minutes show exposing them. Yeah, wow. Okay, so investors don't care. If you ever anybody watches Shark Tank, there's a guy named Kevin O'Leary on there. He sold a software company for $4 billion. Beady eyes, bald head. His classic line is what? All he cares about is making money. And that's really what the stock market is about. I would probably agree with you, Robert. I would probably stay away from this company in lieu of the fundamentals that are not very good. All right. So the lumber is dead. Any other ones? Talk to me. Buy a put. Yeah. You could potentially buy a put on it. Let's see what happens tomorrow. Let's see what happens tomorrow. Let's not beat this. There's always other trades. Always other trades. BPZ. BPZ Resources. Who the heck are they? Oh, I hate that chart. No. BPZ, that's a penny stock. I want to play that game. That's crazy. Forget that one. Give me another stock. Well, so you guys know this particular one showed 27 longs. CMG. Oh, Buffalo Wild Wings. I don't know why the heck I didn't put that one down. That's usually a classic one. Look at that run, folks. 11 out of 11. Okay. BW. LD. I got to put that one down. BWLD. Call. Yeah, Visa. I don't know. What made Visa pop today is what I was wondering. I mean, it just had a really nice, well, I was looking at a short-term chart. I was looking at a 5-day, 5-minute. I said, whoa, because I'm looking first thing in the morning for doing weeklies. And this was just an explosion. Then it just meandered sideways, but then ran up at the end of the day. I don't know what caused this. I don't know what caused this. CMG, TNA, DFS, WBC, yeah, those were all basically on this list as well. There's WBC, 11% move, 7 out of 7 years. What I can do is I'll just go back and put these all down, which I think are good ones. BX, I don't know why, I don't like them for some reason. Blackstone. It's just not, maybe it's because I haven't made good money on them. TNA, again, is an ETF, everybody. I was looking more for stocks because there's FAS. It's for solar. I'm not going to deal with the solar companies. DPS, I don't know. Discovery. It is a huge, huge run, folks, but it's sitting way up here, if you can everybody see that. Sitting way up here, like a lot of stocks are, simply because we've been in one strong heck of a bull run. We haven't had really a correction yet. So, everything looks very strong on this stock. It's running very strong. You look at a 2-year chart, and this is nice to see. So, it's definitely been on a rip roar. Oh yeah, UA. Forgot about them. Nice historical 9 out of 9 coming up. I'm going to have to just put all these down because I didn't have a chance to do it as seasonal longs. But you've got them now, folks, so you can take a look at it. There's AOL again. I talked about that. It's the end of the month. These other ones don't excite me. What is this one? Pilgrim's Pride, I believe, or Polypore. Forget it. That thing's been bought out. Okay. With that, folks, I'm running late. It's 5:10. I thank everybody for the attending and the contribution. I wish everybody great trading this week, and I'll talk to everybody next week.